Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to talk about how much should you start investing? Like, how much of your income should you start investing? And we're going to talk about that today because I know sometimes when we set a value amount, it can sometimes be difficult for some people. So sometimes it's better to just go off a percentage-wise. We'll talk about that number. And so we're going to give you an update on the portfolio. It's been a rocky start to 2021 in the stock market, but that is obviously a given. It seems to happen every single year. So other than that, guys, we'll get right into it. But if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. And so we'll just get right into it. I've said that twice now, but it's okay. So for the day here, we are up $7.41, up 0.32%. For the week, we are up $76.82, up 3.42%. For the month, we are up $68.83, up 3.05%. For the 3 months, we are up $289.38, up 14.22%. For the year, we are currently up, graph's not working, let's refresh that. And yeah, didn't work. Oh, there we go. We're up $303.77, up 15.04%, and it'll be the same for all, but that will change because we are going to be going through our full year almost here. So we'll start getting different numbers for the last 1 year in all. Total portfolio value is $2,323.77 on the day, and we'll just go through every stock that we have here. BCE, which is Bell, is closing out at $54.90, down 21 cents, down 0.38% for the past day. We own 2 shares. Total position value of $109.80. Our average price is $58.05, and it holds about 4.9% of the portfolio. Today's return, it was down 42 cents. Total return since owning this position was $6.30, down 5.43%. What I'm thinking of doing with Bell is in the next time that we start making purchases, I'm going to start dollar cost averaging this one down because it seems like it's consolidating and at this price. So what I mean by consolidating is it's starting to trade like in around that 54 mark consistently. And so what I obviously probably bought at a high price of $58. And so I'm going to try to bring that average price down by purchasing at a lower stock price when the time comes, if it's still down at that at this price point for sure. So that's Bell Canada. Next one is Bank of Montreal, closing out at $99.62. We are down 25 cents on the day, 0.25% in the past day. We own 5 shares of BMO. Total value of the position is $498.10. Our average price is $81.32. Total percentage of the portfolio is 22.25%. We are down $1.25 for the day, but our total return since owning the position is $91.50, up 22.5%. So I won't be doing anything with that, I don't think. Next one is Bank of Nova Scotia, up 78 cents, up 1.15% on the day, closing out at $68.84. We own 7 shares. Total position value of $481.88. Our average price is $54.58. It holds 21.52% of the portfolio. Today's return is $5.46, up 1.15%. And our total return since owning the position is $99.83, up 26.13%. Very good position there. Loblaws closing out at $64.06, down 41 cents today, down 0.64%. We hold 3 shares of this stock. The position is valued at $192.18. Our average price is $64.02. It holds 8.58% of the portfolio. We're down today at $1.23, down 0.64%. And our total return is 11 cents. Here's another stock that I would probably increase the position on just because it is really strongly consolidated at the $64 mark. So increasing my position there and seeing where it goes because we're about the same price that we bought it at. So just want to maybe increase that position and still increase our dividends with Loblaws. Next one is Manulife Financial Corporation, closing out at $24.13, up 17 cents on the day, up 0.71%. We own 17 shares. Total position value is $410.21. Our average price is $19.26. It holds about 18.32% of the portfolio. Today's return is $2.89, up 0.71%. And our total return since owning this position is $82.77, up 25.28%. Next position we have is Royal Bank of Canada, closing out at 108.46, up 62 cents today, up 0.57%. We own 2 shares of Royal Bank of Canada, valued at $216.92. Our average price is $106.10, and it holds about 9.69% of the portfolio. Today's return is $1.24, up 0.57%, and our total return since owning the position is $4.72, up 2.22%. This stock is the stock of January, so we will continue to purchase this one until January 24th, the ex-dividend date, and then we'll move on to the next position. Okay, so this one will be increasing the position in the month of January, and is the newest addition to the portfolio. Next one is TELUS Corporation, closing out at $26.35, down 27 cents, down 1.01%. We own 4 shares of this. Total position value is $105.40. Our average price is $25.36. It holds about 4.71% of the portfolio. Today's return was down $1.08, down 1.01. And our total return since owning the position is $3.96, up 3.9%. Next position, TD, another bank stock, closing out at $74.80, up 60 cents today, up 0.81% for the day. We own 3 shares, total position value of $224.40. Our average price is $71.94. It holds about 10.02% of the portfolio. Today's return is $1.80, up 0.81%. And then total return since owning the position is $8.57. But yeah, that is the final position in this portfolio. Let's just go back to Royal Bank. Royal Bank is I just want to mention something about this. This one is almost back at its highs. The high, that 52-week high, was $109.42. I think it'll break past that for sure, just the way it's trending. But Royal Bank, just so you guys know, is the number 1 bank in Canada, and it is a great value stock. Not so much for a growth stock, but definitely a great value stock that continues to just perform even in the down times, just like we had in 2020. Back in March, it had the least amount of downwards growth. That's not even the word. Just a downward trend. It was down maybe 5% when everything happened, and every other bank was down in the double digits percentage-wise. So that is the portfolio. That is just what I want to talk about. I'm very excited about Royal Bank of Canada getting back to its highs, and I'll continue to increase that position in the month of January of 2021. So we were going to talk about, a good percentage amount to start investing, and a rule that I kind of started when I started was taking 10%, because I know it can be intimidating to put away $100. Not everyone has $100 to put away into investing or into saving. And I get that. I totally understand. That's why I always say, if you're just starting out, put in $25 a month or $50 a month, or go percentage wise. What are you comfortable with? Essentially, usually $25 a month can eventually get you to a position where you can buy shares in companies. Of course, you can buy some, like TELUS, or TELUS would be a good one. Shaw Corporation would be a good one if you're just starting out, because those are companies that are stable within Canada. Maybe not Shaw, but TELUS for sure. That there's a position that you can increase over time, and then as you build that habit of putting money away, saving / investing, you'll eventually start increasing the position and start getting used to putting money away, because that's probably the number one issue that we have maybe in North America is just putting money away. and saving or even investing. And investing, to a lot of people, seem to have a different mindset around it when it comes to investing. But the rule of thumb that I went by when I started investing was putting 10% of my net income. So all the income that I make, that I take home, not my gross income, that's before tax, but after tax, what I take home, I took 10% and put it away. And then started to invest with that. Of course, you should still have an emergency savings fund just in case something happens, you get a flat tire or something needs to be fixed. Emergency fund, that's what it stands for, obviously, because it's an emergency. But you want to start putting away at least 10%, in my opinion, because that way it's not a set value amount. It works off a percentage base. So if you make $1,000 in a month, taking 10% is $100 a month. And then, or if it's $2,000 a month, that's $200 per month put away into investing into stocks that start getting your money to work for you, essentially. And so the rule of thumb for me is 10%, but you decide what that number is for you. And you really want to break it down to what effect does that have on your life, because $25 can essentially make it or break it for some people, and that's not a bad thing, but it's definitely a worse feeling to know that last year was an amazing year in the stock market, and because someone didn't invest, they missed out on those gains. And so starting now, think about maybe how much do you want to put away, not even a dollar amount, but maybe a percentage amount that you want to start putting away. Even 5% is massive, to at least get you in the habit of doing something. Because going in and saying, I'm gonna start putting $1,000 a month away, is not realistic. That's a big chunk of change, especially for some people, and some people don't even make that much in a month. And so do a percentage amount to help you start building that habit of putting money away, and increase it over time, so that you can start living on less. I think the quote goes, live on less than you make is cliche, but it's definitely the thing that gets people through and gets people to start building wealth. Because wealthy people start buying assets that make money for them. They don't buy, the newest and latest Nikes. That might be you, but I'm not sure, but I'm not judging, because Nike's awesome. I'm even considering getting a pair of new shoes, because I haven't bought shoes literally for like the past maybe 5 years. All the shoes that have been bought for me are whether a gift or someone else bought them for me. I literally haven't even bought my gym shoes. They were given to me by my brother. And so I'm not one to go out and just spend money. I like to look at where I can put my money to make me more money. And so that's just part of the wealth building process, or the financial journey that some people want to take. And so hopefully that helps you guys. But remember, the number that maybe you want to shoot for is around that 10% of net income to put away to invest, so that your money can start working for you, and not the other way around where you are working for money, which is not a bad thing either. Some people have to do it, and mad respect to those guys. But because it's Tuesday, but you're seeing this video Wednesday, I got to show the proof of putting $100 a week into the tax-free savings account, to build a dividend portfolio right in front of your eyes. And again, I'm not a financial advisor. I'm definitely not your financial advisor. So please go seek out advice if you need it from a professional. I'm just a guy on YouTube. And so hope you guys did like the video, and we'll definitely see you on Friday to increase our position in Royal Bank of Canada and update our dividend tracker. We are on the way to getting $100 a year in dividends. And we are also on the way to 300 subscribers, but I'm going to set the bar a bit down lower to about 250. I think last time I checked, we were 217. So steady growth. I love it. And again, thank you for the continued support. It really means a lot. And yeah, we'll see you guys in the next one. Bye.